Welcome back to the channel, everybody. Today is week number 10 on the portfolio update. It's been a long, almost 3 months, and I'm glad that you guys are joining me for this day. Today we're going to be talking about some stocks that I'm looking over, and we're going to go through what I own and some of the dividends I was paid out and some of the future dividends that I will be receiving. So let's get into that right now. But before we get into that, please like and subscribe. Subscribe to the channel because you probably need some financial education in your life. With that being said, let's get started. All right, it's been a crazy couple weeks. The growth of my portfolio has been spectacular. But let's just go over the day, the week, the month, the 3 months. So on the day, we're up $21.16, which equals to 0.35%, which has been super solid today. On the week has been even more crazy. We're up $107.11, which equals to 1.79. Now I'm gonna stop right there because 1.79 is like the average of the inflation rate. So at that rate right there, my money is maintaining itself and it's actually not losing money. So that's important to keep in mind. So on the 1 month, we're up $112.89. Well, now it just jumped to $113.05, which gives us a 1.9% return. And then 3 months, I think this is all time. So on the year, in 3 months is the same exact number at 203.44, which equals 3.46% that my portfolio is up. And it's crazy that the growth is just, it seems that small, but realistically, like 3% is, you see, $200, which is a lot of money. In the last video, you guys had liked it, I think, about 28 times, which is awesome. So keep on liking these portfolio videos because remember, 1 like equals $10 that I have to invest into my portfolio on top of the $100 that I do every single week. So with the $100 and the 28 likes, that comes up to $380. So, you know, I want that to go even higher and higher, guys. So keep on smashing that like button, please. So we have the buying power of $388.75, which is great. We got money to invest, which is always nice. Set aside some money every single week or every single month to put into this portfolio so that you can start growing your money at a rate that is way faster than interest rates by keeping it in a bank or, you know, at a savings account. So let's just go through the rundown. Apple stocks, the real estate company. Everybody always asks me, oh, is that like Apple? No, it's actually Apple Real Estate. So AT&T, AGNC, British Petroleum, BP, CubeSmart, ConocoPhillips, Coca-Cola, Disney, ET, Energy Transfer, Ford, Hanesbrands, Iron Mountain, SPHD, JP Morgan Chase, Peggy, Pfizer, Royal Dutch Shell, the gas station, Starbucks, Unilever, CEFL, and then my recent add-on from last week is 3M. So those are the stocks that I do hold. And as you can see, you know, my stocks are killing it on the day, on the month, and on the 3 months. We could go to a 1. Let's just check out Ford right now. You know, this has been crazy. And I was buying, as you can see right here, the average cost, $8.68. It's been going crazy. Now, the total return is $41.50, which is spectacular. But remember, we are not in it for the gains. We are in it for the cash flow. It's always nice to see how the stock is performing and that it is growing so that, you know, maybe we could get bigger dividend payouts, bigger cash flow payouts. But, you know, I'm pretty proud at my Ford position right now. You know, it's getting higher and higher and higher. But the key is, you know, keep on contributing to it. But especially when it's low, let's say if it drops down back to the $8.68 range, I'm just gonna rack it up. Another winner that's been killing it too, we could click on Pfizer. I'm up $33.81. It went as high as $39 the last time I checked, so it's on the rise, and I had bought that position a long time ago, so just holding it. You know, they pay a nice dividend as well. Starbucks, you know, I'm only up $13, but I did get it at a discount for like, I think it was, $83. So, you know, you have to realize and you kind of have to follow the market to see where the discounts were happening. I had picked that up when it was 12% off or like 13-14% off. So, you know, there was room to grab some shares and to let it grow over time. So, and remember, that pays a dividend as well. But 3M, like I said, they pay a $5.40 dividend. So I've got 3 of them. So that's like $18 that I got every single year coming in from dividends. All right, so my watch list, and this is very important because I've been paying attention to a lot more companies, trying to do my research on some. So we got British American Tobacco. Now the price is $42.34, but I like the yield, 6.34. Remember guys, check dividend.com because some of them are not as accurate as dividend.com, and they're not updated from the Robinhood app, which is what they have to work on. But with that being said, it is kind of close to 6.34, and they pay a $2.70 dividend. So that's excellent numbers, and you could rack up a ton because the price is relatively cheaper than, let's just say, an Apple or a Facebook or a Amazon. So I had figured out about this one a couple of days ago. Actually, I was watching some trader, and he was talking about this one and how he receives dividends on international paper. So you're probably thinking, international paper, what do? They probably just sell paper. And that's absolutely correct. They got a dividend yield of 4.42, so that's in my sweet spot. And the company is so boring. Like, you want to have companies that are boring, because those are the most sustainable ones that are out there in the field. International Paper engages in the manufacture of paper and packaging products. Like, it's so boring. That's exactly what you want, though. You don't want something crazy. It's not going to fluctuate in the stock price and stuff like that. It's not going to just jump to 100 from $40. It's probably got to maintain slight growth over time, but it's the dividend that we try to capture and we try to take advantage of. Another one is Philip Morris, and they pay a huge dividend, which is super great. So it's at a relatively low number at $85 a share. So that is something I'm looking into. But the 3 big ones that I'm looking at is, and this one right here, if y'all didn't see my story from the other day, this one is a beast. Like, all around, the payout ratio is nice, the PE ratio is nice, the price is decent, obviously, because it's a lot higher than what most people pay for. The dividend yield is nice. Let's just see, the growth over time, been solid, always been up. You can see the 5 years been up 61%, which is awesome. Like, you can't beat that. And just, the business of cruises, Royal Caribbean Cruises, IBM, and this is a growth stock too. And it has a nice dividend yield. The PE ratio is slightly lower, so that's something that you would want to take a look at. Payout ratio is great. I think it's around 40 to 50%. If I'm not mistaken, but I'm gonna put the numbers up every time I talk about these stocks. It's a technology company, so I just need to get into that field of technology. And then the last one I've been looking at is Simon Property Group. Like I said before in the last video, I think I talked about it. This is the biggest retail mall real estate investment trust on the market and in the country. They own like every single mall or every single outlet center you could probably think of. And they pay a huge dividend, but like I said, the payout ratio has me kind of scared because it's over 100%. And remember, if the payout ratio is over 100%, that means they're paying out more than they earn. So just to keep something aware. But with real estate investment stocks, they are obligated to pay out 90% of the profits to the shareholders. So it's always relatively going to be high with real estate stocks. So just keep that in mind. But, and it's this one on the 5 years down 20%. So that's a good time to capture. And I might have to snag some. But, we got the Apple, McDonald's, Pepsi, Bank of America, Walmart, and just a couple ETFs. And so the Apple, McDonald's, Pepsi, and Bank of America, when the fractional shares start to come out, I'm gonna start racking up some so we could buy some of these big blue chip companies that just probably won't ever just go out of business in the next 5 to 10 to 15 years. History now, and then we're gonna hit the dividends. Let's click on that. Now, as you can see, I was already paid the other day 80 cents from my Apple real estate investment stock. I got paid for Coca-Cola, but the ones coming up is CEFL. I got $1.07 coming. And then we're starting to see the January dividends, because these are some of the other stocks that haven't paid in December but are going to be paying me in January. We got $1.86 from Iron Mountain, which is the real estate stock. And then we got Disney for $1.76. Now Disney, I only have 2 of them, and they pay a nice dividend at 88 cents per share, so that equals up to a solid number of $1.76. And remember, Disney pays every 6 months, so I won't be seeing $1.76 until 6 months later. But that's exactly why we diversify, so we can get all these different payments from these different companies every single month, every 3 months, and every 6 months. So you don't have to just wait on one stock to pay you every 6 months, because obviously that wouldn't be a good investment strategy. I have $388.75 to spend. Remember, guys, you don't have to buy something right away. You can just sit on that cash until there is something that you want to buy. I do want to buy some stocks right now as we speak, but I just checked the calendar, and next Wednesday is, you guessed it, Christmas Day. So I'm gonna save my money. I'm gonna need y'all to like this video a lot, so I can rack up more money to put into this, so that I can make a big purchase on Christmas, and that could be one way that I can give myself a gift. But yeah, guys, thank you guys so much for watching. If you haven't already, smash the like button and subscribe. Hit the bell so you guys get notified every time I drop a video. I drop Monday, Wednesdays, and Fridays, so that's 3 times a week of great content that I'll be giving you guys every single week in free game. I don't charge anything, I'm just here to talk about what I've learned over the couple years and how I'm going about my journey of financial freedom. So definitely do that. This holiday season, we got the New Year's. If there's anybody's birthday coming up, and especially on Christmas, let's try to not be materialistic this year. Let's try to get some people some investments, even though it's probably a boring gift to give people like a stock. Like, that stock is making them money, and it's probably gonna be giving them a dividend. So we just trying to change the culture a bit. So let's turn into investors instead of consumers every single year. If you're going into debt this Christmas to buy people gifts, like, take a second and understand what I just said, because it just sounds super ridiculous. If you can't afford it, you don't need to go into debt to show somebody that you love them. You can give them a hug, you can give them a stock, you can give them some sort of investment. That's the boring thing that I would do. But you should definitely do that. Save your money. Don't be splurging like crazy. Don't go into credit card debt. And it's all about loving your family this time of year. So just show them a lot more love than just material things. You don't want to get their brain all messed up.